Okay, hello everybody, and welcome back to another video from the Investor Diary. This is my third take, not because of any technical mistakes, but because of me finding myself blabbing. And I don't want to do that. I want to be straight to the point. Uh, Another thing that happened during today is that during the week I was preparing for this video, and how I was preparing because I was conducting a full multi-time frame market structure analysis of the Euro USD. And this is what I wanted to show you what I have learned and how I'm applying it. But during the past couple of days, I ran into a video from the person that I'm learning this stuff from. And his video wasn't a teaching one. He was actually analyzing the Euro USD. So what he did was he started with the 6 months. Now, this beginning actually got me confused because the what I am used to and what I followed and how I drew things, that I would start with the weekly, then go down to the daily, 4 hour, 15 minute, 5 minute, and the 1 minute. Okay, this is what I used to do. Now, in this example, what he did, and in the way, not example, in the way that he was analyzing the EURUSD, what he did was he went from the 6 months directly to the weekly, and then skipping the daily and going to the 4 hour, and he stopped there. Uh, he stopped, but because of this, I'm assuming that he will go to the 15 minute, which is normal. Okay, and then he will skip the 5 minute and the 3 minute, and will go directly from the 15 minute to the 1 minute. I think this is, although in all his teaching videos he was doing what I mentioned before. So that information confused me, one, but then it made more sense to me than what I used to do. In many cases, I found that the daily and the 4 hour are kind of very close structures, so there is not much of a difference. They're speaking kind of the same language. Yes, sometimes we would find them on opposite terms. One is going up and the other one is going down. Absolutely, yes. But in many cases, they have the same structure. So it made sense to me to go from the weekly to the 4 hour, actually. And then it makes sense to go from the 15 minute to the 1 minute, because I'm also realizing the same with between the 15 minute and the 5 minute time frames. So, and I cannot do the analysis anymore because I was learning from that last video what he was doing, and therefore now what I have is kind of a copy. I didn't copy it. I was learning, so I would close that video and see where would I be able to see those elements? Would I be able to define those ranges the way he's doing? So I would do it on my own and then check back with the video if there is anything that I missed or something that I didn't understand. So at the end, the result would be, yes, this is a copy of that. Therefore, I cannot analyze the Euro USD based on this, because now it's going to be a copy of his video, and this is not the intention. Okay. My intention is actually to show you what to show what I have learned, and to apply the things that I have learned to make it um, to enable me be sure if I have actually listening to myself, if I actually got the concepts and was able to express them and explain them. Actually, this is the third take, because I found myself of this video, because I found myself not being able to explain what I want to explain. So, and in this case, that means I I need more time in implementing those concepts, and I realized that. So now we're starting with the with the 6 month, I did the Euro USD, but there was something that I could not catch because in the middle of his video, what he did was he went to the weekly and then he went back to the 3 month to do something. Okay. Now that also confused me. So I finished the Euro USD from the 6 month until the 15 minutes. Okay. And let's take a quick look at what's happening. So in the 6 month, there is a reaction from this order block. That means it's going up. The whole structure is bullish. The 6 month structure is bullish. So there is a reaction from this extreme order block and going up. We'll see on the 1 week there is a reaction from a week, as he mentioned. Why I'm saying this, because now I want to show you, I'm not going to analyze his analysis, but I'm going to show you why I went, what confused me, and how I solved this, how I solved part of this confusion. Okay, so on the weekly, okay, the structure is upward as well. Okay, it made a reaction from this inducement and it's going up. On the, now this is the weekly. Now we'll go to the 4 hour. The 4 hour, the structure is going up and should be going to this inducement. So it's either going to this inducement or it's going to go up. And in this case, we will move only the, see, this is an inducement and also the low of the 15. We will move the inducement of the 4 hour, but we will keep the low of the 15 at this level, but it will not appear at the 4 hour. It will not at all appear here. It's appearing here because it is a 4 hour level. So this one we're waiting for it, and this is how we stop here. But I didn't stop here. Why? I went to the 15 because in this case I am waiting to see if there is a structure going to be built, that it's going. Wow, see this reaction. Okay, so it seems to be that it might actually be going down. So it went up, caught something here, okay, and this will be more identified on the 1 minute. What on either on the 5 or the 1 minute? What it caught here, okay, and it's now going. It should be going down. This is a huge candle, actually, a huge bearish candle. Anyway, so this is why I stopped at the 15 minutes. Now, see this, what I told you, this will appear what's happening here, what it took from here. This wick here is something on the 3 minute and this I understand. Okay. But why he started this analysis from the 6 month and there was a previous analysis of some other pair, he started with the 3 months. I really couldn't I couldn't understand. So when I finished this and found that I still have a little bit of time, I went to the GBPUSD. So I went to the 6 months. Okay, so this is the 6 months, and let's look. It is downward. It's obvious that it's downward. Okay. Now I looking at this. Now those are the 3 month lines. Forget about them. So I look here. I'm looking for an inducement. So this is not a pullback. So it's not an inducement. So I move to the next low to see if there is an inducement. There is no inducement here. There is no pullback. Sorry, the only pullback is here. Okay, so this is the inducement which is not hit. Okay, so if we're going to wait for this inducement, unless we look for this lower low, okay, and we would be still waiting for the inducement to be hit. Okay, Is it true? Yes, this is, and this is not the inducement. This is the inducement. Let's check. Yes. Okay, this is the inducement, and there is no other. Yes, there is no other pullback. Okay, this is the pullback. This is the inducement, and we will be waiting for it. So when I saw this, I thought more details will appear on the 3 months. So I went to the 3 months and looked, and here I found an inducement that is hit. Therefore, this is the low of the range. That means this is the high of the range. And now we can play. So from the 3 months, we will go to the 1 week. Okay. So this now I started to understand something that confused me. Now I understand part of it. There is something that he did going from the weekly back to the 1 month, so from a lower time frame to a higher time frame for a point of interest that I did not understand. Normally I would understand going to a lower time frame to refine a point of interest, but to go the I thought I lost my I thought I lost my recording. My recording is in the this is why I paused. I thought I paused in disappointment. So good, it's still going. So yeah, this is my understanding is that we go down to refine a point of interest, but to go up for a point of interest that I could not understand. Let me show you, maybe to show you what really confused me. It was on the weekly and went to the 1 month, I think. Not on the GBP, no, on the EURUSD. So we were on the weekly. Yes, this one. Okay, this one. So here we have this order block here. Okay, and this is the order block that I actually drew. This was the one that I drew. Okay, on the weekly. So when I drew this on this order block on the weekly, this did not hit it. So I wondered, is it going to go again up to try to hit it one more time? But then in his video, I found that the order block is already hit. What happened? He went to the 1 month, okay, and in the 1 month he looked at this order block and he took that order block. So that, fine, I understood the concept as explained, but the issue is that what would make me on when I am doing the analysis on my own, when I find an order block, why would I go back to a higher level and use the high level parameters while we know that we go lower to refine the point of interest? That is something that I think I still need more experience or more knowledge on. I don't know. Time will tell us how we will get that. So now on the EURUSD, yes. So now we talked about the difference, which time frames I used to have. Now these are the new time frames that I'm going to use, starting from the 6 month. And actually, it made sense why. Because, for example, this order block, started from the six. No, yes, started from the 6 month. This description is confusing me. So without this, I would treat a lower time frame. And now this is the issue now in my head. Why would I go to a low to, for example, the 15-minute or even the daily, and treat it as an independent time frame, while I have information that could be useful in other time frames, whether lower or higher? So there is this technique from the same person that is talking about either do a top-down analysis or work on the time frame on its own, and it can work. And yes, it can work, absolutely. I'm not against that. But the question to myself is, why would I choose doing trading on one time frame while there is important information available in other time frames, without understanding this and knowing that the price actually touched this and now we have a reaction from this point of interest? So moving to the weekly with this in mind, so because with this, now we are treating this as a change of character. Otherwise, what will happen is that this will be the break of structure downward, and this will be the inducement, and I will wait until it breaks, which one, until it breaks the high, wherever that high is. Okay, I think this is the high. I think this is the high. Yes. So I need to wait until this high. Yes, this is the W basic high. I need to wait until this high is broken. And until now, it's not broken. So all this, what's happening here, I will be just on the sideline. While with this information here, I can use this. This is a break of structure. So I will be looking at a range from this low. This is a break of structure. Where is the high? Okay, this is an inducement that was hit. So this is the high. Now we have a break of structure here. But before the break of structure, once we have this break, this inducement as a break of structure, and this high as the high of the range, and this is the low of the range, then we have this information about the weekly. Now we have an order flow and order block to work with. Tell you what, we didn't work with them, but then now we have a reaction here from this order flow. Is if we kept on waiting on this time frame, okay, sorry, not on this range, okay, I will be waiting for this to be hit and for the price to go down a totally different direction, because this is not broken yet. So we don't have, if this was independent and we don't have this information, this is an inducement and this is the low and this is the high. Okay, so the inducement was hit and it went up, so it's going to grab something from above here, from this area, to make it go down, continue its downward movement. Okay, so this is what we have. This is the this is the order block that we have on the monthly. So on the weekly, this is the order block that we have. This one, not this one. This is a monthly one. Okay, so on the weekly, this is the order block that we have, which is not hit yet, and I'll be waiting for that to be hit. Why? So as to get a reaction for the price to go down. Now what happened is that the price, one, didn't hit it, two, it made a reaction down, which I will not be able to explain because I'm not on other time frames, and now I will suspect that it is going down, so I will be waiting for another lower high and lower low, and go with the price downward, thinking that it's going downward. And I think this difference is hugely important, whether to take a top-down analysis or the comparison between a top-down analysis and an independent market structure on one time frame. For me, I will choose the top down analysis, and I cannot call it top down because it's dynamic. It's going up and down. We're going up and down in the time frames to understand the structure and to understand how the price is moving. Anyway, my time is up. Thank you very much, and I hope next week I will have something more solid, some trades that I will be able to show you that I took based on this theory. Thank you very much, and I look forward to talking to you next week. Bye bye.